Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight is go over the most recent technical levels set forth by DailyFX.com. So let's go ahead. I'm going to go ahead and just pull up the charts here. The first chart is the Euro-Dollar, and if you recall during last week's report, this is the resistance line I've been using. There was a nice trade off the resistance line. Let me zoom in here. Personally, I entered at the 26.10 area on this candle. I did not cover, and I was actually stuck in the trade as prices then moved back above the resistance level. But this is a key point. There was no close back above the resistance level. I stayed in the trade and actually exited on the next candle just above the low of the candle that actually penetrated the resistance line. There was about a 50 pip trade in there. And also on the forum, I was asked a question as to why I would draw the line kind of ignoring this high over here. And it was an excellent question. And this is something that I never really do. And whenever I see it on the course, it's something that I always try to correct. But in this particular case, the reason was when you have a move like this, and let me zoom in a little closer here, so we can see it. And this is the move I'm speaking about, which I'm ignoring in the resistance line. It's a very short-term move, sort of an aberration, if you will. So that's why I'm not really counting it. What I would, say is I would definitely avoid drawing lines like this. Like we have a perfect resistance line here. We see we have a bunch of points. But let's assume like we had penetration over here, let's say, and maybe a slight penetration over there. At that point, I would no longer use the resistance line. And we can see that even though the resistance line might act as resistance in the future, it's just a slippery slope when you start doing things like that. And it makes your analysis very subjective. So once in a while, I'm going to ignore penetration of the line, and this was one case, again, because it was very quick and short. Now, moving forward, I missed the Sunday open here, and we can see that prices did actually break above the resistance line and close there. And what I would say now, and it looks like this is happening right now, prices are testing the backside of that resistance line. So this is a trade that's setting up right now, but of course this is a short-term trade idea. Absolutely anything can happen. So I would look to maybe enter here with a stop 50 pips beneath, or exit on a close beneath the resistance line. But again, short-term trading idea, keep the risk tight. Next chart is the dollar-yen, and this is the resistance line that I've been using for the past, I'd say, 2 weeks now. We can see that prices are still contained beneath the resistance line, no trades yet. And we just look for a move up towards that resistance line. But as time is progressing here, I have a little less confidence in this line, so be on the lookout for breakouts above the line. The next chart is the Kiwi dollar. And as I was mentioning in the last report, I was looking for an entry back near that 53.50 low on the short side. I actually got the entry at about the 53.40 area and covered for about 50 pips. I missed the Sunday open again, and this actually was the last candle on Friday, and we could see that prices did break above the resistance line and now have fallen beneath the resistance line. And if this candle were to close back beneath the resistance line, then I would just ignore this line. And this line would be no longer relevant. So right now we have about 9 minutes left. I'm doing the report a little early tonight. 9 minutes left. It appears as though this candle will close beneath the 53.50 area. If that does happen, I'd just again ignore the temporary resistance line near the 53.50 area. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.